Hey everybody, Smart Silver Stacker here. Hope you're doing well. In today's video, we're going to be discussing the impending collapse of the petrodollar system because there are some recent developments in the Middle East which lead me to believe that the petrodollar system is living on borrowed time. And also, we'll be getting into how that potential collapse informs my forecast for triple-digit silver. We're going to get into all of that later in this video, but first I do want to just take a look at the market action today, specifically in the precious metals. You can see gold and silver both in the red today, only slightly. Prices here courtesy of SD Bullion. And by the way, if you're in the market to pick up some gold or silver on this pullback, make sure you check out SD Bullion with the link down in the description. I personally just ordered one of these 1 ounce random design coins, these gold coins that SD Bullion has on sale at the moment, and I am eagerly awaiting that. I'll give you an unboxing video when that comes in, but it might be a little while before that happens because the shipping time at SD Bullion is under a little bit of pressure, meaning it's a little bit delayed. And we're going to talk about that as well later on in this video and what that means for the physical market. I've got some interesting information from the folks over at SD Bullion. I was talking with them about that earlier today, but you can see here gold back down into the 1960s, a little bit of a pullback from that $2,000 level, which it continues to kind of flirt with. Silver down to around the low $23 level, still consolidating its gains. And I view this pullback as a pretty normal, healthy pullback in a bull market in the precious metals. Looks like what's responsible for this market action today is that investors are having their fears about Deutsche Bank assuaged somewhat. That was the latest victim, if you want to call it that, in this ongoing banking crisis. There was some concern at the end of last week with Deutsche Bank's solvency. The credit default swaps were getting bid up. The share price was plummeting. But, you know, Deutsche Bank is a much more sound financial institution than, say, Credit Suisse. At least that's what the media would have you believe. And it is true that Deutsche Bank has been profitable for several years in a row. That's a talking point that I've seen mentioned in several of these stories in the mainstream financial media. But it kind of reminds me of a story that Nassim Taleb tells, I think it's in The Black Swan, about how these financial institutions oftentimes, they eat like chickens, but they defecate like elephants. And what he means by that is that yes, these banks, you know, they can put on profits for several years in a row, but in this environment specifically that we're living in today of super high leverage brought on by these decades of low interest rates, there is a real risk of a major collapse occurring in a short time, which could possibly wipe out years of profitability. And I do think that that risk remains not just with Deutsche Bank, but with many of these levered up financial institutions. But based on the market action today, kind of a mixed day in the stock market. I haven't looked at the indexes too recently, somewhere in the red, somewhere in the green. No major movements there, at least at the time I'm recording this video. But the pullback in metals, I think, relates to investors' fears about Deutsche Bank and about this banking crisis being assuaged for the time being. But if you ask me, it's probably not going to last for long. That's why I went ahead and pulled the trigger on a gold purchase today. Now, investors' concerns about the banks may be assuaged, but there were some developments this weekend that I want to get into, which I think paint a very ill portent for the petrodollar system. And we're going to get into that in just a moment. First, I do want to say a big thank you to channel sponsor Silver Botanicals and their line of household and personal hygiene products. You can check them out with the link down in the description. And don't forget to use coupon code STACKER to save 10% off your Silver Botanicals order. Now, these events in the Middle East, which we witnessed over the weekend, they really kicked off last Thursday when there was a drone strike on a U.S. base in northern Syria. Now, for some reason, at the time of that strike, which was carried out by a drone, it was like one of these suicide drones of Iranian origin, according to the U.S., the air defense system at the base was offline at the time this attack occurred. Now, whether it was a coincidence that this drone slipped through the air defense or if perhaps they were aware, whoever launched this attack was aware that the air defense system was offline and they were taking advantage of it, that remains unclear. But nonetheless, this drone did slip through, and it killed one U.S. contractor, and 5 U.S. service personnel were wounded. The U.S. blaming this attack on Iranian-backed forces in Syria, or pro-Iranian forces, I think was the actual verbiage used. And this was probably one of these Shahed 136 suicide drones. I haven't heard any specifics on what type of drone it was, but this is the same type that allegedly the Iranians are providing to the Russians for use in Ukraine. And as a result of this attack on this U.S. base, President Biden ordered airstrikes on pro-Iranian forces in the region. And the last I checked, the death count from those attacks was now 19. Now, following these airstrikes, an Iranian security official issued the warning that if Iranian bases in the region were struck, there would be an immediate counter response. Now, what that means exactly remains somewhat unclear, but it is a bit ominous. And also, following these attacks, this exchange of attacks, there have reportedly been gun battles between these pro-Iranian forces and U.S. military personnel in northern Syria, and the combat has become more intense than it has been in some time there. Now, of course, this development is bad on its own. It's an escalation in a notoriously unstable area of the world, but we need to look at this growing conflict now in Syria, this reignited conflict there, against the backdrop, the bigger picture of geopolitical events, because I don't think that there's any coincidence that this hotspot is reigniting now following this Chinese brokered peace deal between Saudi Arabia and Iran. China has been increasing its influence in the Middle East for some time now, and this could be a watershed moment, this peace deal that was brokered by the Chinese between the Saudis and the Iranians. Now, the Chinese have been doing a lot to boost their influence in the Middle East. They've got their Belt and Road Initiative, sort of a re-envisioning a modern Silk Road, and this involves the Chinese financing the construction of infrastructure throughout Africa and the Middle East and parts of Europe to facilitate trade with China, both overland and through waterways. And China has also become the largest trading partner of Saudi Arabia, and notably, they are the largest purchaser of oil from Saudi Arabia and also from Iraq. Now, Iraq is the second largest oil producer in OPEC, so that is a notable data point that we need to take into account here. And earlier this year, Iraq announced that they were going to begin bilateral trade with China in yuan. Now, that trade was previously being conducted in dollars. So you're starting to get an idea of the picture here, what is happening in the Middle East. And now that deal with Iraq, that excluded oil. So for now, the petrodollar system, and that's the system that was pioneered by Henry Kissinger and Richard Nixon back in the 1970s, whereby Saudi Arabia and then by default, OPEC prices their oil in US dollars. And this leads to a lot of demand for dollars around the world. It allows us to export a lot of debt. Also, part of that system is that the Saudis buy U.S. treasuries, so that helps keep the cost of borrowing for the U.S. government low. And, you know, the Saudis have been dropping some not-so-subtle hints for the past year or so about pricing their oil in either yuan or possibly some other instrument, but something other than the dollar. And so, you know, we've been seeing China make inroads. We're getting this sort of de-dollarization vibe from a lot of these countries, Iraq, Saudi Arabia. You know, it was in December that Xi Jinping was over in Riyadh, the capital of Saudi Arabia, at the Gulf China Summit, and he was petitioning these Gulf countries, these big oil producers, to price their oil and gas exports in yuan, specifically at the Shanghai Petroleum Exchange. Now, at the same time, they've penned a big gas deal with Qatar. I believe it's a 25-year gas deal with them. We've got the Saudi Aramco CEO, I believe this was back in 2021. He told the Chinese that providing oil and meeting their energy needs would be the highest priority of Aramco, that's the Saudi national energy company, for the next 50 years. And also, simultaneously, while all of this is playing out, we've got the BRICS nations, that's Brazil, Russia, India, China, and South Africa. they're thinking of expanding. The South African leadership has told us that at the BRICS summit in August, that expansion of BRICS is going to be a key element of this year's summit. And Iran and Saudi Arabia have both put a bid in to join. Now, isn't it convenient that leading up to this summit that we have a peace deal brokered by one of the BRICS countries between these two countries? So that really does open the door for them to join BRICS, and, you know, everybody over at BRICS will be kumbaya. They'll all be on the same team. The conflict between Iran and Saudi Arabia seemingly over, and they're kind of delineating the lines here where this multipolar world order will be emerging. And it looks like, you know, Saudi Arabia might be going into the opposite camp of the U.S. Now, the Saudis have been an ally of the U.S. for some time, and the petrodollar arrangement really kind of solidified that strategic relationship. But we all know that last year, Saudi-U.S. ties kind of hit a low point when the Saudis and OPEC cut production by 2 million barrels, despite strong pressure from the U.S. to delay that production cut because of high inflation in the U.S. You know, politicians in the U.S. wanted to help keep inflation under control, but the Saudis wanted to maximize their profits. I mean, it's understandable. They're pursuing their self-interest. But in response, we got this NOPEC bill, which I don't think actually passed, but that was a bill that would have allowed antitrust lawsuits to be brought against these national oil companies. And also, we had lawmakers here in the U.S. suggested that we stop arming the Saudis and divert those weapons, including Patriot missile launchers, to Ukraine. Now, a key element of the deal that was pioneered by Nixon and Kissinger back in the 1970s, the petrodollar arrangement, was that Saudi Arabia, they'd price their oil in U.S. dollars, but in exchange, they would get weapons and a strategic partnership and alliance with the U.S. So, you know, this whole thing is starting to kind of fall apart. I would say it's safe to say that at no point in the petrodollar's 5-decade or so history has it ever been on shakier ground. And now that Iran and Saudi Arabia and China all seem to be making friends, we're seeing this conflict between the U.S. and Iran escalating. You know, I just don't think this is a coincidence. You know, this is not shocking. And also, we've got in Israel, you know, this is the big story today. They're having a protest there because Benjamin Netanyahu's government is trying to implement this judicial overhaul. Now, I'm not intimately familiar with the details of this or the politics inside of Israel, but it does seem like elements of the military and officials there are opposed to this. It looks like maybe it is a bit of an authoritarian overreach on the part of the Israeli government, something which would allow them to escape legal scrutiny for acts that they perform in a war. So you've kind of got to wonder, with this conflict between the U.S. and Iran escalating, you know, why are they trying to do this judicial overhaul right here? You know, what are they preparing for? Could be a broader regional war. Now, I mean, hopefully cooler heads will prevail and this isn't going to devolve into a broader conflict in the Middle East or perhaps, you know, a world war of types, because, I mean, we've already got the conflict raging in Ukraine, but it does seem like every time the petrodollar gets threatened, you know, war, revolution, instability, it seems to follow. I mean, this is not a new thing. Just ask Muammar Gaddafi or Saddam Hussein, or if you want to go back to the 1950s, you can talk about Mohammad Mossadegh, the democratically elected prime minister of Iran, who was overthrown by the CIA and British intelligence. And, you know, that's not a conspiracy theory. You can read about that in the history books, and it was all over the Iranian National Oil Company. So, you know, this would not be the first time that there was some funny business involving oil in the Middle East, not by a long shot. And, you know, the problem here, I think, for the U.S. this time around is that a Chinese, Iranian, Saudi, Russian alliance is probably going to be a little bit tougher of a nut to crack than, say, Libya or Iraq. And so, you know, I think it's safe to say that this system, this petrodollar system, is on very shaky ground now. And, you know, what does all of this have to do with silver? You know, I've been going on about the petrodollar here for some time now in this video already, but this is inextricably linked to silver, because if the petrodollar fails, if this system gets replaced, and it's looking like that may well be the case. I mean, it could happen as early as August. That is when the BRICS summit in South Africa is taking place. We've already heard Sergei Lavrov tell us that they're going to be discussing an alternative reserve currency to the dollar. At the same time, we've got Iran and Russia, working on a gold-backed stablecoin to settle international energy payments. So, maybe the Saudis will get on board for that now that the Iranians and the Saudis are pals. But the point is, when this system fails, and it goes to anything else, whether that be Saudi Arabia selling oil for yuan or for other regional currencies or for gold or a gold-backed stablecoin, doesn't really matter. All those dollars that nations around the world right now are holding simply because they like to buy petroleum and all the oil is priced in dollars, well, they're not going to need those dollars anymore. And so those dollars, they're going to come flooding back into the US. And that means that inflation is going to be a much bigger problem. We've already got very high inflation, so, this is not a good situation. And, possibly under, let's say, normal circumstances where we had a healthy economy, maybe we could transition away from the petrodollar and everything would be okay, or, maybe we get a little blip up in inflation or something like that. But again, we have to look at the big picture here. Look at the backdrop of events and the situation that this will be occurring against. I mean, we've got $31.6 trillion in debt here in the US. We've got hundreds of trillions in unfunded liabilities that the Treasury and the government's on the hook for. We've got BRICS, the BRICS nations, actively seeking to de-dollarize the world economy. They're setting up bilateral trade agreements where they pay in regional currencies. They're developing these alternative payment systems. They're off SWIFT now, at least, Iran and Russia are. And China is working on alternatives to that as well. They're worried about getting sanctioned because we've got this weaponized dollar. In 2022, I think we did more, sanctions than maybe the 5 years before that. I don't know the exact numbers, but the amount of economic warfare, fifth generational warfare, sanctions, that sort of thing is absolutely sky high compared to the historical level. So the dollar has been weaponized. Russia's had their dollar-denominated assets completely frozen, and so that's got other countries around the world concerned that they might be next on that list. And we've already got high inflation. Last we heard from the CPI, it's officially 6% year over year, and we know that the CPI understates the real inflation, so it's higher than that. And to top it all off, we've got the financial system falling apart around us. We just had the second largest and the third largest bank failures in U.S. history occur within days of one another. We've got the Fed, they're already loading the balance sheet back up with these distressed assets. I mean, who knows how long that's going to go on. Yeah, we got a 25 basis point rate hike, but that doesn't mean anything when you consider the fact that quantitative tightening has essentially ended, at least for now, and QE seems to be the order of the day. And, all of this is going to trigger a flight into hard assets. And if the petrodollar system falls apart, I mean, that could be the final nail in the coffin for the dollar status as the world reserve currency. And that's why I believe, this gets us to the triple-digit silver forecast that I have, because I think that we're going to be taking out the all-time high in silver when all of this plays out. And right now, I mean, silver is unbelievably cheap. The all-time high for silver, if you adjust it for inflation, just using the CPI, the $50 price that silver hit back in 1980 is over $190 in today's dollars. So, I think that we're going to take that number out very likely. And we know the CPI understates inflation, so let's call it $200. And I would think that that would be the floor for an estimate of how high silver could go. Because keep in mind, that's just factoring in all of the inflation that has already taken place. It has nothing to do with the inflation which is coming. Now, I know that some people watching will say, hey, the 1980 price was just a spike up. It's not like silver stayed that high. Yeah, I don't think that silver necessarily will, spike up to these very high valuations and then stay there for any length of time. But there are a few possible scenarios that could play out. One is that, we go into an entirely different economic paradigm where the dollar is essentially gone. I mean, maybe we'll have a new dollar or something like that. That's typically what happens in a hyperinflation is you just, lop off some zeros and now you have a new currency. Maybe we'll see something like that. Maybe it'll be a central bank digital currency. I don't know. Maybe silver will just be a way to get your wealth over to the next financial paradigm. But it's also possible that, we don't get hyperinflation. Maybe the U.S. economy will be more robust than that. I would hope that would be the case. And, everything doesn't land just wrong for the dollar and for the U.S. economy. But, things aren't looking good for it. But even if that's the case, even if we just get a spike up in, say, dollar values of silver, there will be an opportunity, I think, to swap out precious metals for other assets that will be on sale at that time. And right now, silver is incredibly undervalued. Gold, too, to a lesser extent, but gold also still is very cheap at today's prices. There's a lot of other assets, paper assets, stocks, real estate. Not that real estate is a paper asset, but you get my meaning here. There's a lot of assets which are at very high valuations today, and gold and silver are not on that list. They are extremely undervalued, and I think that there will be an inversion of that situation here at some point in the future. And, a lot of people also say, well, it was the Hunt brothers in 1980. Well, I think the Hunt brothers just illustrated what could really happen in the physical market when you get a big influx into it. And what do you think is going to happen if all of these things that I just described play out? Already with the problems that we are experiencing in the banking system, there has been a huge influx into physical metals. And things are only just getting started, if you ask me. But I was just talking to the folks over at SD Bullion today, and they tell me that, they're on track to hit record sales. They're selling a ton of physical metal. They have a huge number of orders. They got a backlog they're trying to work through. And I've gotten some comments lately about long shipping times from SD Bullion. And yeah, they will acknowledge that that is the case. Now, I fully expect that they will work through that backlog and they will be able to get these orders out to everybody, but it is taking a little longer than usual. And it's not just them. This is an industry-wide phenomenon. One of the things that they shared with me today is not only is the number of orders for physical metal, both gold and silver, through the roof, but also their average order size has just about tripled. So they're not only having more orders, but they are doing more very large orders. And I think that this is an indication that some of the smart money, some of the very wealthy in society are moving into the precious metals. And, this is what happens when a very small, tiny market like the physical metal market comes under any kind of buying pressure. You have to keep in mind that the annual silver production is somewhere just over 800 million ounces of silver globally produced every year. And if you multiply that by today's spot price, it gives you a market cap of something like $20 billion for an entire year's production of silver. Now, keep in mind, a lot of that silver has to get consumed by industry. It's not like people are stacking all of this silver up and it's getting saved somewhere. No, it's getting used up. It's getting used to make electric vehicles, solar panels, all this stuff. In fact, last year, we had one of the biggest silver deficits on record. But, a whole year of production, only $20 billion. Now, how many millionaires are there in the U.S.? It's something like 21 million, I think, in the U.S. So, if all of those millionaires decide to start getting into real physical tangible assets, and it looks like maybe we're at the beginning of that trend, and I don't blame them. They're concerned about their deposits in the banks, the financial institutions, which seem to perhaps be less liquid than we would have otherwise believed, following the events at SVB and Signature Bank. If they all start to get into physical silver, well, forget long shipping times. You're not going to be able to find any of this stuff. It's just not going to be available. That is why I think it is essential to take advantage of the fact that the price, not only is it available, but the prices are still very low. They have not even begun to move. As I said, I forecast that we will be seeing triple-digit silver before this cycle ends. What's that going to mean entirely? Well, I don't know. I don't have a crystal ball, but I do know that this stuff is incredibly cheap right now. The fear among investors right now regarding the banking system is driving individuals into physical metal in a way that is creating some bottlenecks, for distribution and the ability to get your hands on this stuff. And I think it's going to get a lot worse before all is said and done. Now, we may have a reprieve. We're getting a little pullback in the spot price today. That's why I ordered today. I like to buy on the pullbacks. I don't like to buy on the days when silver's up, 7%. I prefer to wait for a little bit of a correction, a little bit of a pullback in the precious metals before I do my stacking. Again, none of this is financial advice, but if you've been waiting to get your hands on some silver, if you're, a seasoned stacker, you got a nice little stack of metal and you're just trying to bring your dollar cost average down, that's fine. But if you're a new stacker or you don't have any of this, physical wealth without counterparty risk in the world that we are entering into here as 2023 continues to play out, well, I would go get some. Again, not advice. I'm not telling you what to do. Do your own due diligence, but that's what I would do in that situation. So anyway, this is kind of a long one, but there was just a lot to cover, and I thought that this was important. So let me know what you think about these developments over in the Middle East. Let me know what you think about the banking system. Is everything going to be okay there, or are we going to see some more pain before this is all said and done? Let me know in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.